Alright, everyone. So I'm going to talk about a trade I took this morning and why I took it. As this is the trade. Now, I didn't record today's session because getting up today, I said I wouldn't really trade today because there's no news. But I did see a really nice setup. Now, a lot of people probably thinking that we're going to run to these relative equal highs. And I do have that in mind, but not immediately. I think it will take a while before we actually try and make our way up there. And I didn't think we would do it today. So I'm looking in the morning. I get up and I'm looking at all this low resistance liquidity, right? I had around 8 a.m. Oh, yeah, so let's say it's around 8 a.m. I'm seeing all this low resistance liquidity at the highs. And so it seems to be harder and harder to keep going lower. And so I'm thinking, okay, we might want to target the highs. What I wrote down in my journal is sell side taken this morning, buy side liquidity at 20,085. Maybe this morning targets to 20,030. And then that 20,030 was these highs, these relative equal highs up there. Okay, so I wanted to see this just to kind of like break this trend lower a little bit. And if we saw that, we could continue to go lower and even make new lows, even though we've already done that, right, at 9 o'clock. That's something that I knew a lot of traders wouldn't expect. A lot of traders are thinking, okay, 8:30 Judah swing, market structure shift, 2022 model, and it failed on them completely. Why? Because we're Monday. We're not expecting these huge expansions, right? This is only a Judah swing to get people into shorts or fail people to get into longs as smart money's building up their position size to then really make the big move of the day. So whenever we have days where I don't really feel good about trading, where there's no news, where I think that nothing's really going to happen, usually those days will consolidate and they'll try and, more than any other day, try and make traders get chopped up and make them lose. So as you see here, I'm seeing this run up that targets about almost 20k near those relative equal highs, and we've kind of broken a bit of this trend lower on the lower time frame. So I'm seeing the short-term high that was put in at 9:30. We closed above it, we left an order block, and we started to displace. As we displaced and we created this 5-minute fair value gap, we came back into it. I went short inside this 5-minute fair value gap. I saw the 5-minute fair value gap be created here. Now, I wasn't even looking at the 5-minute fair value gap, right? I was looking at the 1-minute chart. I was seeing this high get put in here. And then I saw this candle make a new high, creating a big bullish fair value gap. And I said, okay, right there, right, this is going to get a lot of people thinking that the trend changed. We're now going higher. We're going to target this high. And now we're going to go lower. Another thing that made me more confident that we weren't going to go higher is, and I mention this a lot, but the Dow. All right, this is just going higher, and every time the Dow is going higher first, I mean they can follow each other, but every time the Dow is leading, it's the Nasdaq's usually not going to have it. If the markets are going up, it's a Nasdaq that leads. Now, why is the Dow going up on its own? I don't know, but it has to do with the companies that are in the Dow and the Nasdaq. But usually these are closely correlated, right? However, right now they're really not. So I'm seeing the S&P off 930 and the Dow trade higher, and I'm seeing the Nasdaq fail to trade higher and start to turn lower. So I expect these two indexes, you see the S&P already started to kind of fail, but I expect the Dow and the S&P to eventually start to fail and start to trade lower, agreeing with the Nasdaq, right? So immediately when I see Dow go up, I'm just not liking the longs. I don't like to take longs on the Nasdaq when I see the Dow is the one that's making those higher highs first, right? Anyways, because if the Nasdaq really wanted to go up, it would have went up, especially with the Dow. It would have went a lot higher than the Dow, right? Because the Nasdaq's failing. The stronger market's the Nasdaq, and I know that the Dow is eventually going to fail. So anyways, with that, let's get to watching the video. It's about 5 minutes, and I'm gonna probably post a a sped up version with music, because it was a really nice trade. This is, I'm just setting my stop loss. This is when I short right above that high. I had this 5-minute short term high on my chart. That order block was created on the 5-minute chart, and so I'm just setting a 30-point take profit. I'm setting a 30-point take profit because this was taken. So if you don't know how I trade, I don't just put my take profit at the lows. The reason is because I want to have a fixed profit every time, because if a lot of people don't read the contracts that they get into when they trade funded accounts, but the prop firm I'm with, if you have like one big win and all your other wins are smaller, they can ask you to submit a bunch of documents like your trading model, recordings of your trades, and data of your model, and then explain why one of your trades is much more than all your other trades. Right, so I try and keep them all the same, strict take profit, 20 to 30 points, and yeah, maybe 40 points. But I could have maybe held this one at 40 points, but it's whatever. And so I'm seeing that big fair value gap that formed, and it is alarming, but I want to see it get inversed. So you'll see it kind of, I'm looking at the other time frames here to kind of remember that, not to focus on that small fair value gap, but to focus on the higher time frame delivery, right? This is why I spend most of my time looking at the 15-minute chart, and I don't go into the 1-minute chart until I see something on the 15-minute chart that can get me short. And I did see something on the 15-minute chart that would get me short. This is the formation at order block, and also the 5-minute chart. So even though there's that 1-minute fair value gap, right, the one right here that I'm highlighting, right, that big one that drew into the red area, which is a bearish fair value gap, even though that's there, I'm still cautious, and just fixing my attention to the higher time frame delivery. So that's why it helped when I got these other charts up. And I'm also seeing the Dow, right, making those higher highs. So I know that eventually the Nasdaq shouldn't follow the Dow. It's the Dow that should follow the Nasdaq and submit to the Nasdaq's will. So if the Nasdaq has lower delivery and we have higher highs on Dow, that just increases the difference of opinions. People probably thinking that the Nasdaq's going to start to go with the Dow, and just creates more liquidity, in my opinion. But I'm seeing the body sort of respect this fair value gap, and I'm starting to get, when I see it kind of run up here, I'm starting to get a little bit nervous about the stop out. But I'm watching that short-term high. Right after I went short, it made that high, and I would allow it to come back one more time above that high. It had started to run here at 30 ticks, and then when it came all the way back into negative, I'm like, damn. You see, it gets close to that high, and this is just the exact same thing on a seconds chart that I was using on a 1-minute chart, above this short-term high. It will do this thing one more time because price is fractal. And then my screen freezes here. I don't know why I did this, but I had to switch over. You hear me kind of saying what's going on, but I had to switch over to a different page to see if it would work, because I didn't want to switch the other time frames and have it freeze on me too. But yeah, then it starts to really run really quickly. There was no news or anything. It just, the delivery of the algorithm started to spool, and so you see, like, initially those highs kind of gave people the impression that we're in profit. So anyone buying this fair value gap initially had profit, and then they thought that maybe they were on the right side of the market. And I've been that person before, where I'm buying these fair value gaps that are nice and big and look obvious, and I see initial profit, and then it comes right back and it's very violent against me. This is how you know that the market's literally this morning. This one goal was to confuse traders and to get them thinking 2022 model. And I bet you if I go and watch streamers, well, I don't want to bet that, but I want to see. I'll be curious to go see if I go watch other streamers this morning, if they were trying to take longs here instead of shorts, because it went down very quickly. So I think there was a lot of people trying to buy this thing. But it just runs it out here simply as there you go. So that was the trade. Yeah, I guess that's just the logic behind the trade I wanted to share. Oh, one more thing I didn't mention is in the playback, you see me put this vertical line 1050 right here. I did that. You'll see me measure 15 minutes out from 1035 to 1050 because that's in my rules. If I'm holding a trade for 15 minutes, I need to have a break even stop or take something off. I will not take a loss by holding unless I'm already in drawdown, by holding a trade past 15 minutes. I don't care if it is still good, if it might still work. It's just a mentality thing. I refuse to take a loss after 15 minutes of holding a trade because most of my trades are 7 to 8 minutes. I know that because I journal all my trades. I track all my trades, so I know that the trade length should be about 7 to 8 minutes. Sometimes it can go 12, 15, 20 minutes. But if it's going to be in drawdown after 15 minutes, which is an unusual length of time for my trades, I'm taking something off. Right, or it's break even and no risk. That's why I had that 1050 there, just to remind me that when we get to 1050, when we get to this vertical line, put your stop to break even. But yeah, that's it.